Okay, before we get into the details of this module, I want to do a review of shareholders' equity because it's important that you understand what makes shareholders' equity change during the accounting period. I need you to get have that good foundation before we get into more of the details of shareholders' equity. All right, we had a problem way back in the beginning of the course where you were told the beginning and ending balances of your assets, liabilities, and shareholders' equity. Well, I'm going to go ahead and set this up where I've got my information of my beginning assets and beginning liabilities and ending liabilities. Now we know that assets have to equal liabilities plus shareholders' equity, so I can figure out my beginning shareholders' equity. I don't know how much of this $50,000 is common stock versus retained earnings, but I do know that it doesn't matter for this problem, and if it did, I'd have to give you that breakdown. All right, so we also know our ending. Now let's go through what else were we given. We were told our revenues, expenses, and stock, and what we're asked to do is calculate dividends. Well, I hope you remember that shareholders' equity changes with revenues, expenses, dividends, and stock. I told you to remember REDS. So that's what makes or explains the change between the beginning and ending balances. So let's go ahead and lay down the information under shareholders' equity. We know revenues make shareholders' equity go up, credit revenue, and then you have expenses make it go down, you debit expenses, and then they say no new stock, but if we did, we'd be crediting stock if we issued stock. Now what we're told to figure out, or we're asked to figure out, is dividends. So that's what I have to solve for, and if you can see, we've got an equation now. So you solve for your dividends by laying out your beginning plus your change with x being dividends equals your ending. Then you isolate x and you get 10,000. So you have your income statement, which is your revenues minus your expenses, like we've been doing all along, and your statement of changes in shareholders' equity will tell you what happened to your stock. You started with a certain amount, no new stock was issued, or no changes in stock, and that's your ending. But we also know that our beginning retained earnings, which I don't again know the beginning amount, but it didn't matter for this problem. We have our beginning plus our net income from our income statement minus our dividends equals ending. Okay, now I just want to have you take a look here. I did something I really don't like doing, which are one-sided entries here. So let me just go through what might balance out these changes in shareholders' equity. Well, revenues, I don't know whether it was cash, but let's just assume all of it was to cash. But it could be to unearned revenue here, where we'd have some of it as a decrease. But I'm going to keep this simple. I just want to give you a general idea here. But if you look here, our liabilities, they did go up by 50,000, so we do owe more. And typically you owe more because you haven't paid for all your expenses. So let's assume that was all to payables. So if you look at that, it means that we must have paid 90,000 of our expenses, or let's assume so. Now our dividends, we had paid 10,000, and this was the 10,000, and then no new stock, so we had zero cash coming in. So I would like you though to realize that in this chapter, what's going to in a sense blow up on us is stock. I've made it seem a little more simplistic than it actually is in real life. And so that's what we'll see. You'll see that you can get cash from issuing stock, but what we're also going to find is that a company can buy back its own stock. So this isn't always going to be an increase. We may be purchasing our own stock as a company. And in that case, down would go cash, credit cash, and you would actually debit the shareholders' equity. Now the account you debit is not the stock account, but we'll get into that later. For now, I want you to keep in mind the basics. I want you to remember REDS so that when we get into all these details, you hopefully won't start to lose what you do know. All right, so we'll move on after this.